Welcome. We are in segment number 3, Have a Plan, of the Financial Management for Small Business Owners presentation. I'm Maggie Longest. I'm Executive Director of Downtown Ashland Association. I'm glad to host today Eric Glymph, President of Edge Business Planning, to walk us through the survival skills for every small business owner when it comes to financial management. So let's hear section number 3, Eric.
Okay, thanks, Maggie. So we are on section 3, which is have a plan. And we're really going to talk about developing a plan. Some people might call it a budget, or some people call it a forecast or a plan. So we're going to talk about what is it, how do you go about making a plan? And the first thing is think about, and these, you look at these and they're pretty straightforward. Like, we need to have a good business model, right? You need to generate revenue. You need to have something that people are willing to buy, right? Something that you can sell and they're like, hey, I'm willing to buy this. You need to make profit on that. You need to be able to generate some profit, not necessarily right out of the gate, but over time you want to be able to generate a profit, and you want to be able to produce those positive cash flows. We talked about that in the previous sections about making sure that you have a positive operating cash flow. Okay, so to do that, you want to create that budget or forecast. And why? What is the reason of having a budget or forecast? Well, it gives you goals. It gives you goals to compare to actual results. And I always use the analogy of playing golf. I know not everybody plays golf, but I'm sure somebody's watched golf, and hopefully most people have watched it. And you go out to a golf course, even if it's a putt course. You go out to a golf course, and there's a par on there. It's a par 3 or par 4 or par 5. Well, that's the general expectation of what they're expecting you to do on that hole. So if you go to a hole and it's par 4 and you hit a 5, oh, well, the expectation was I hit a 4, I got a 5. What do I need to do next time to do better? Or you got a 3 and like, great, I did better. But if you went to that hole and there was nothing there, and you went and you hit a 7, you hit 7 shots, you're like, is that good or bad? I don't know. I have no idea. So same analogy when it comes to businesses and a budget or forecast. You want to have a plan so that, hey, this is what we think is going to happen based on the best information we have at this point, and then what actually happened, and then you adjust for that. You may do better, or you may do worse, but at least you have a goal and you can adjust to that. Using a forecast allows you to understand your cash needs, which is important, as we talked about some of the reasons why you have cash flow problems. One of the things to help alleviate that is to have a plan, a forecast, and what you expect your cash needs to be, so you can plan for that in advance. And then using your the budget or forecast, you want to be able to have find those 3 or 4 key metrics that you use to manage your business every day. So your sales, average revenue per customer, profit per job, customer churn. These are some ideas of some metrics. It really depends on your business and your industry that you're in on what are the right metrics for you. And if you're not sure, it's always good that you could go to, if there's an industry association or a trade association, you can go to their website and understand what maybe those key metrics are. So finding those 3 or 4 key metrics and setting goals for those means that you won't have to look at your budget or forecast in details. You'd say, hey, if I know that my average revenue per customer needs to be this, and my number of sales need to be this, and I have goals for that, and I'm managing to that every day or week or month, and you're hitting those goals, and at the end of the month, you probably have a pretty idea where your profitability is going to be anyway. Okay. So let's talk about bottoms-up forecasting. That's really talking about a forecast, a detailed forecast. So starting from each revenue line and each expense line on your P&L, understanding what are the key drivers that are important to your business. What are those fixed costs that you're going to have that aren't going to change? What are those variable costs that you have, and detailing it out by month, and hopefully even by month or by year, so that you can understand what are those different projecting out your expenses, looking at your growth and revenue. And if you're an existing business, a lot of times you can take your historical information and use that as a starting point And then factor in on top of that, okay, what are those things that are changing in our business? Are we thinking about opening a new location or adding employees? And so add those into your forecast around that. And then look at those resource constraints. What are those things that we'd like to do, but maybe we have limited cash, or these days we've talked to a lot of people, like they want to grow but they can't find good people, so that's a resource constraint. And so different things like that you want to factor into your budget, or your forecast. So you want to look at that by month or year, and then be able to kind of take your existing knowledge and then factor in things that might be changing in your business, or even in the industry or the economy or the environment, whatever, the best information that you have. You're the ones that know your business, so you want to be able to put that in place as well.
So I feel like we've done a lot of this year. A lot of small business owners have done a lot of this year, starting with a zero-based budget, figuring out what they absolutely have to have within their budget to stay open, right? And then figuring out what their sales have to be to meet that, and what it's going to take to meet that sales goal, right? Then you're adding your labor cost in, and you may be bumping that number up. But it sounds like you're suggesting we start at that zero base, and then add in goals, add in our hopes on top of it.
Yeah. You want to add in, like, you want to look and say, what has happened in the past year. That's a good baseline to start with. But things are going to change every year, especially this past year. Like, it's going to be a lot different, right? So hopefully people have expectations that the economy is going to recover, and you're going to you start seeing, hopefully, things get back to some semblance of normalcy, whatever that is. So yeah, you need to take your historical information, but you also need to have a good assessment of what do you think is going to happen going forward, so you can put that into the plan as well. And so I'll jump on the next slide, but one thing I'll say is that you want to make sure that in a challenging time such as we've been in the last year, I've heard a lot of people say, they're like, well, I don't even know where to start, right? I can't, things are changing every day. And what I usually say is I would create 3 forecasts. One is a worst case, medium case, and best case scenario. What are the things that say, here's where we are today, and if this happens, then this is what's going to happen on business. If maybe something not as good happens and the trajectory maybe heads downward, how is that going to impact me? And that way you can use that to kind of determine what's the best, when things start, changing and adjusting, what's the best way to adapt to that. So I will say that, forecasting, one of the key things is you're going to make numbers up. There's no doubt about it. I taught some classes at VCU, and the students are always, their mind blows. They're like, I'm making numbers up. And I'm like, well, yes, but your business, right? Your business better than anybody else. And, you're estimating what you think is going to happen, but without making them up or putting this together, then you have nothing to base it on. So once you get to the end of the first quarter, for example, you would say, oh, we thought our sales were going to be 150,000. Well, they ended up being 130,000. Okay, why was that? Oh, well, our average selling price was less than we thought it was going to be. Okay, well, why is that? Maybe, and then how do you adjust your business? Maybe it's because another competitor came in, or, you ended up having to discount because you had a big opportunity, those type of things. But without that forecast, and you're just saying, well, we did 130,000. I don't know if that's good or not, So that's why, and that way you can use that plan to adapt and adjust as needed. Okay, so that is forecasting. We're going to continue on this one and talk just for a couple minutes about taxes. So taxes are not just once a year. A lot of businesses think about taxes, and they think about our year-end income tax that we have to pay. But the ones I've seen the most impact where businesses get hurt are around payroll taxes and sales taxes. Okay? So payroll taxes, I can't stress enough that if anybody's doing their own tax or payroll taxes right now, find a payroll service to do it. There's lots of them out there. They're very inexpensive. They are on top of all the current payroll laws. They will file all your returns for you. If you get behind on your payroll taxes, the state will be on you very quickly. The federal government, that's an area where they Especially the states are very aggressive on that. So you want to make sure you stay on top of your payroll information, payroll taxes as well. Contractors, you want to make sure that you understand that. I'm not going to get too much into the employees versus contractors. That's more of a legal definition. I know in the state of Virginia, it's much harder to even have a contractor these days. There's very specific rules around that. But if you do have contractors, you want to make sure your contractors understand that they are responsible for their taxes, that you don't responsible for their taxes, that they are basically paying 15% in federal payroll taxes that that you as a business owner are not paying. So they need to make sure to understand that, because I've seen it happen where contractors are like, great, I'm getting paid a good wage, but then they go to file their taxes and then they have this huge tax bill, and they come back to you and go, why didn't you tell me this? And you're like, well, because you're a contractor. And while the owner is not responsible for those taxes, it's just a good practice just to make sure they understand that. It's up to them to make the decision to do it or not, but you need to make sure they know that. And make sure owner pay, that you know how to structure your owner pay. Work with your tax advisor on that. Depending on how your corporation is structured, it has a lot of differences in how you can take money out of your business, whether it's through payroll or owner's distributions or dividends or those type of things. And don't forget about sales tax. Sales tax has become a big kind of a hornet's nest, I guess you could say, because a lot of the states are getting more aggressive on collecting sales tax on products and services that are sold from other states. So there are some good third-party companies out there. One's called Avalara, Avalara, that basically works with businesses who do a lot of sales tax in a lot of other states, and make sure that they are on top of that sales tax. So that's it for that. We'll jump to the last section here in our next video.